Give me 5 minutes and I'll show you the 6 steps smart real estate flippers take to legally keep over $20,000 away from the IRS every time they close a deal. Most investors are overpaying simply because no one's ever shown them how the tax game actually works. Step one is don't flip in your own name. If you're buying and flipping homes under your own personal name, you're risking it all, your money and your stuff. What's a better idea is start an LLC or S Corp. That's like giving your business a superhero shield. It protects your personal stuff and opens up tax benefits too, like writing off certain stuff, like paying yourself in a smarter way. Step two is watch out for capital gains tax. Here's what most flippers goof up on. If you sell a house in less than a year, your profit gets taxed like regular income, which could be super high. If you can't hold it for just a little longer, over a year, you might qualify for long-term capital gains tax, which is usually way lower. Now, I know most flips don't take a whole year, but if you can hold off or time things right, it could save you thousands in taxes. Step three is track every penny you spend. Flipping isn't cheap. There's paint, plumbing, permits, and probably pizza for your crew. But here's the good news. Almost everything you spend on a flip might be a tax write-off. Keep track of things like renovation costs, contractor receipts, realtor commissions, loan interest, and as well as marketing. And you also might have anything from utilities and insurance while you own it. Here's a pro tip. Use apps like QuickBooks, Stessa, or even a simple Google Sheet. Just stay organized and your future self and your tax pro will thank you. Hey family, let's take a quick break. I hope you're gaining massive value from this video. But let's be real, over 75% of people watching these videos aren't even subscribed yet. If you're serious about building real wealth and keeping more of your money, hit that subscribe button and turn on your notifications. Secondly, if you're a high income business owner or a real estate investor, you're probably overpaying in taxes by 30 to 40% every single year. I can guarantee it. I'm offering free discovery calls right now for those who are ready to take action and take control over their taxes, their business, and their future. That's right. This is your chance to get a personalized, comprehensive plan to keep more of what you earn. I'm talking about saving $10,000 to $50,000 or more in the first year alone. Click the link below to book your free call, but don't wait. Spots are limited. Let's lock in your savings and your strategy. Now, let's get back to the video. Step four is use the 1031 exchange trick. This one is super fancy but powerful. Let's say you flip a house and make a fat profit on it. Normally you owe taxes on that gain, but here's the difference. If you take that money and reinvest it into another property right away, you can postpone the taxes on something that's called a 1031 exchange. That means more cash stays in your business, helping you do your next flip even faster. But just remember, there are rules and deadlines. You must use what's called a special helper called a qualified intermediary. Step five is home office deduction. Do you do some of your flipping business from home? Maybe you plan deals, make calls, or do some books in your home office. Guess what? You might be able to write off a part of your rent or mortgage interest, your internet, or your electrical bill. As long as it's a real workspace you can use regularly, it could be a legal tax deduction. And if you turn a flip into a rental for a little while before selling, you may also be able to depreciate the building, which means more tax savings. Step number 6 is don't miss these sweet tax credits. These are like secret bonus points from the government. If you add solar panels or upgrade your HVAC system, that's heating and air conditioning, or if you fix up a historic property, you might qualify for real tax credits, and credits are better than deductions. They knock money straight off your tax bill. It's like saying, nah, IRS, I'm keeping this. Always talk to a tax pro who knows real estate like me. I'll drop a link in the description if you want to book a discovery call, and make sure you're not leaving money on the table. Next up, check out our video on how real estate investors legally pay almost zero in taxes. Trust me, you don't want to miss it.